And once you guys have that open, I'm gonna have you guys just sit back, relax, and I'm gonna play you a short training video so you can just understand how to look at Liberty.
Today, we're going to be talking about HFX in the Master the Skill video series. Today, we're going to be talking about HFX strategies specifically. The purpose of this video series is to provide an overview of the HFX strategies taught by the IM official educators and to help you improve your trading success. We will be covering the associated indicators of each strategy and how to use them. As we begin, it's important to remember the 3 steps to trade success. Step 1 is to identify if price is consolidating or trending. If price is consolidating, we want to look for trade entries at the top and bottom of the consolidation range. If price is trending, we want to look for trade entries in the direction of the trend. Step 2 is to confirm your trade idea using the indicators. Two is to confirm your trade idea using the indicators. Hello and welcome to whether you are put option, price will go down with a trade time expiration of either 3 candles or a time given by the IM official educator. To identify whether the market is consolidating versus trending, we need to identify different pivot points in the market. And as you can see in this example on the euro to US dollar, you can identify put and call options at the top and bottom of the price consolidation range. And once price breaks out in a given direction, either up or down, we can then look for put options in a downtrend or call options if we're in an uptrend. Now that we've covered the 3 steps to trade success, as well as reviewed the importance of first identifying whether you are in a consolidation phase or in a trending time of the market, let's dive into the Webslinger, which is one of the strategies found on the Liberty website. If you go to goliberty.im and log in, you can come up to here and you'll notice the strategies tab. It has 3 strategies: simple scalper, pickpocket, and Webslinger. We have a separate video for each one of these strategies, so review those if you need to go into more detail on either of those other 2 strategies. For this video, we'll be covering Webslinger. Now on Webslinger, it's important to note a few initial things. First is you want to pay attention to the time frame of your chart. It's indicated in the upper left corner here next to the currency pair. USD CHF indicates the currency pair, and the 5 indicates the time frame of the chart that you're on. 5 here, or 5M, as you see here, indicates you are in the 5-minute time frame chart. Now on the right side, you have an alert panel, which alerts you to locations where you might consider a trade opportunity. Now, we don't place trades exclusively based on this alert, but this clues us into a moment in time on the chart where there might be a good potential trade opportunity. So this can help kind of give you a starting point for where there might be a good trading opportunity. Now, for the purposes of this video, I'm going to teach you how to identify which phase of the market that you're in, utilizing the indicators that are on this strategy, as well as certain trade entry reasons that you may find very useful. So with Webslinger, we have over 20 different indicators. Now, it may seem overwhelming at first, but once you understand how these work in conjunction with each other, it will actually become very simple. So initially, you'll see all of these lines that are near the candles. The candles represent price, blue candles represent upward price movement, red candles represent downward price movement. And all of these lines that are near the price are moving average lines. In other words, these lines represent a calculation of a certain number of candles on the chart. They might be anywhere from 5 candles in their calculation, as indicated by these lines that are very close to the price, all the way up to a 200-point moving average line, which is indicated by this purple line down here, which is actually a 90-point moving average line. In addition to all of these moving average lines, we also have what's called the Ichimoku cloud. And that's indicated here by this green cloud here. It has a green line kind of on the top, a red line on the bottom. And when price is above the cloud, you'll note that the cloud is green. And when price moves below the cloud, as you see here, the cloud turns red. So the Ichimoku cloud is a trend following indicator and gives us an idea for where price might move next. In addition to that, we use all of these moving average lines to give us an idea for which phase of the market that we're in. If we consider these two times here, we can clearly see that something is very different. So let's draw a few lines to indicate what we're seeing. At a beginning level, whenever you see all of these lines kind of squished together like this, especially when they get all kind of black light right in this zone here, that's a dead indication that you are in a consolidation phase. We can further confirm this by simply drawing a line near all of the top pivot points of these waves. We can also draw a line near the lower pivot points of these waves, indicating that when the market is in a state of consolidation, we have upward and downward wave patterns to the price, and that when price comes to either the lower range of that channel, it reverses. And when it comes to the upper level of that channel, it reverses and comes back down. And so our strategy can be looking at these previous pivot points and looking to reverse the market when it gets there, as long as we're seeing all these lines on top of each other. So we would look to place call options near the bottom in these cases and put options near the top. There are additional strategies that also work very well during a consolidation phase of the market. In particular, the simple scalper strategy with the use of the Bollinger Band can be very helpful for that given type of phase in the market. For further details on that, refer to the simple scalper video tutorial. Now, during a trending time of the market, you'll note that these moving average lines spread out quite a bit, as indicated during this time here. And while the market was going up very strongly, all of these moving average lines separate out. You'll also note that all of these candles are hanging out well above the Ichimoku cloud, indicated here, and that the cloud is also green, indicating upward overall movement. So how do we then place trades in a trending phase versus a consolidation phase? As a review, we place reversal trades at the top and bottom of the consolidation phase. But once we enter a trending phase, we want to trade with the trend. And we do this in several different ways. One of the simplest ways that exists is simply to look for a point of retracement and then trade with the next candle, which we refer to as a confirmation candle, that moves in the direction of the trend. So in this case, we have this large blue candle that breaks out from the previous ceiling that we had during our consolidation phase. After that, we have a red candle, indicated here, that retraces back down. A red candle means the price moved down, so it came back down to this previous ceiling, which it will now act like a floor. And you'll note that we have this small blue candle moving in the direction of the initial breakout, which was the upward direction. So in this case, our rule can be to place a call option at the close of that blue candle. Once we place that trade, we reference again our time frame, which is a 5-minute chart. So we want to place the trade expiration for 3 of these candles, which would be 15 minutes. 3 times 5 minutes is 15 minutes. So if we look at that trade opportunity, we place it here, predicting that the price will go up for a call option. And then we count 3 candles. 1, 2, 3. The price closes at the top of this blue little doji candle here, and we win that trade because the price closes above where we entered our price, or where we entered our trade. We now see an additional retracement, these 2 red candles here, and then a confirmation candle with this blue candle here. So once that candle closes and it is blue, we clearly see that price is still way above all of these moving average lines. It is also above the Ichimoku cloud. So in this case, we can place the trade for 3 candles. We count them out, 1, 2, 3. Here is where this red candle closes. It is still above our entry price, so we win that trade. This red candle also becomes a form of retracement. Now, we never know if there's going to be 1 or 10 retracement candles involved in a retracement. But that's why we wait for this confirmation candle. Once we have a blue candle in favor of our uptrend, okay, we're in an uptrend, that confirms that price is now moving back in the direction of the trend. So we place a call option once that candle closes after our retracement candle, which is the red candle. We do it for 3 candles, 1, 2, 3. The price closes up here and we win another trade. So we now have 3 winning trades in a row. We now have an additional retracement candle, this red candle here, followed by an additional blue candle. We want our trade decisions to be very objective, and this is why we look for closed candles to help us make our trade decisions. And we then place our call option for 3 candles, 1, 2, 3. Price closes at the bottom of this red candle here, and it is clearly above our entry price, and we win yet another trade. We then get an additional retracement. These 2 red candles come down, and then we have an additional confirmation candle, this blue candle here. We place our call option in favor of the trend, and you'll know that we're not taking any put options in this uptrend. We want to trade with the trend. We want all of the strength and momentum to be with our trade and not against it. So in this case, we have our confirmation candle, 1, 2, 3 candles up, price closes above our entry point, and we win the trade again. Now you'll note that typically how a strong trend works is you can get an initial clue that the trend is likely going to end once you lose a trade in the series. So on this next time, we have here 2 retracement candles and then a confirmation candle, this blue one here. So if we place our call option and then count 3 candles, 1, 2, 3, this trade clearly loses because it closes up below our call option. And that is our first indication that this strong uptrend is now beginning to wane and it might change into a downtrend. And you can see at that point is when the market begins to turn and work into a downward direction. So at that point, you want to wait for further confirmation that these lines are spreading back out and that they are getting wider with time, as you can see here, versus at this point here, you can see that all of these moving average lines begin to grow more and more narrow over time, indicating that price is moving in a downward direction. So just simply identifying whether or not these lines are on top of each other during a state of consolidation will give you an idea for where to take trades during that phase, as well as especially during a strong trending time. The Webslinger strategy works phenomenally well at visually giving you an idea that the price is moving strongly in either the up or down direction. And you want to simply take trades in favor of the trend. So very simple strategy, very effective. If you want a little bit more of a visual indication of the consolidation phase, we recommend using the simple scalper because it utilizes the Bollinger Band, which is very useful in identifying the top and bottom of these wave patterns. We hope you enjoyed this.
So now that you guys kind of understand how to look at Liberty, there's a lot of stuff to it that can be, daunting, like, oh my gosh, like, what am I really doing? But what you're really doing here is wanting to look for just uptrends, okay? That's all you're going to be using Liberty for, okay? So obviously, like, for example, if on my screen, you'd obviously want to ride this, okay? This would be a perfect example of riding this because the emoji cloud tells you, like you said, how to continue the continuation upwards. All you have to get in is for the pullbacks and then the buy. But how we're going to use this in the most simplistic way is that we're going to first, okay, we're going to go to Forex Factory. We check the news always. So let's see, 7:17, let me check New York time. So in literally 10 minutes, we have news. Bailey speaks, so Governor Bailey speaks about, obviously that's going to be about the British pound. So most likely the British pound's going to get hit. So we don't want to trade the British pound most likely. So after we find out that the only news there is GBP, we move on to the currency strength. And remember the currency strength meter. Oh, wow, is this really, wow, the market's pretty, do you guys see this? It's pretty dead even right now. That's crazy. Anyways, are you guys here? Sorry, I don't know if you guys. Can everyone hear me?
Yeah.
So how you want to utilize Liberty is by looking for the trending pair. So obviously euro versus most likely GBP or the rest, because honestly, remember, if it's 2 bars versus 4, right? Remember the PDF I gave you guys? Remember what it said? It said that if it's 2 versus 4, it could be going in a downward direction. So don't be tricked just because it looks like it's not pumping or it's not the greatest pump. Remember, we refer back to the PDF. 2 bars versus 4 means a downward direction. 4 bars versus 1 means an upward direction. Now 4 bars versus, or 5 bars versus 4 could also mean an upward direction with a lot of resistance, okay? So our best bet would most likely be euro versus GBP, or we could try CHF versus CAD, since we know that it's going to be in a downward direction. So what we would do is just go over to Liberty, and instead of looking at the panels, you guys, sometimes it takes too long. If you guys look on my screen, you could just simply type in the pair right here, and it's super fast, sorry. Do you guys see my screen?
Yeah.
So all we're gonna do is type in CHF. Where's that there? Versus CAD. CAD versus CHF. Yes, there's a CAD versus CHF. And yeah, look at that, you guys. So this is an hour. Now, how you look at this, you guys, is you notice that this isn't an uptrend, okay? And all we're gonna do from here is go from the 1 hour to the 15-minute to check, to check the closer time frames to see what direction it's going. And it looks like it's been going up. You see the mochi cloud? It's above the mochi cloud. Now we go to 5 minutes. And from 5 minutes, it looks like it's been uptrending. And all we're gonna do from right here is simply go over to our horizontal line. Now I know that I've shown you guys the Fibonacci retracement, but that's a little bit, you know what? Yeah, it's a little bit confusing. I feel like it's too much information all at once. So I'll just simply do the horizontal line. We're gonna change the horizontal line to red, and red indicates resistant level. So that means that's the roof, okay? And we're gonna change the thickness all the way to the 4th tab. Now, all you're doing on Liberty is finding the roof of where it's been pumping and bouncing back, okay? So simply you're gonna do it down here, see that it's pumped 1, 2, 3 times. You're saying, I don't really know if I want that. So you see down here, this is another roof, and it's hit it 1, 2, 3 times before it really came out and then dropped back down. So once we find the roof, all we're gonna do is change our color to green. Not that one. We're gonna change the next band to green, and we're gonna find support. So support hit 1, 2, 3, 4 times over here in this area. So we can hit right there. Next support level. We had a big bounce. There's a floor back here. It would be right here. Now from this point, do you see where 7400 or 74 498, sorry, 498 is? You see how it kind of bounced off that line? This will bounce off the support line for an entry, or it can go lower. And if you see the mochi cloud, it's in red, so it could go lower, and the lowest it can go could be all the way down to 455 and 436. Now from this point, I want you guys to go to Hourglass because you guys see the direction now, okay? And all we're gonna do is go to CAD CHF. Okay, and now since we're at CAD CHF, we obviously see a lot better overview of what it actually looks like with the Bollinger Bands and with everything there. So we could actually take an actual trade now after the next minute candle prints, and you could kind of refer back to Liberty to also get another entry, okay? So obviously you see right here that 4,500 on CAD CHF is a support barrier, right? So if you go onto here, wow, look at that, you guys. Do you see my screen? Do you see how I drew the support? That's 4,500, everybody. So I drew this without even looking at Hourglass, okay? And as soon as I turned to Hourglass, I looked at the support and it was 4,500, okay? Same thing here on Liberty. You see how I found that? 4,500. And I drew this before I even looked at Hourglass, okay? So this was a good indication that you could have made a 2-minute buy just for it to go up since it's been pumping up and down. Or you could be patient and wait since the overall picture of where the market's going is on Liberty. Hourglass to me is like a shorter time frame, like up and close, you have all of your confirmation indicators. But Liberty, how I like to use Liberty, is getting those actual pivot points and where the market has bounced. So if you were a little bit patient trader, you can wait until this drops, draw another line, and expect it to kind of bounce from right here. So now you have 3 entry points for 4,500, 4,007 or 4,475, and 4,435. These are 3 entry points that you can take as the market's going back up, because since we noticed this is the 5-minute, we go to the hour on Liberty. What did we notice long term? It's uptrending, correct? And it's above the mochi cloud. So if you were here, a couple hours ago or a day ago, maybe 3 days ago, you could have profited all off of this like uptrend just because you noticed it's in an uptrend. Obviously here it's hitting some resistance, but the next cloud went from blue, red to blue, signifying that we're above the red mochi cloud, signifying another buying opportunity. And our roof is right here, right? So if this breaks that roof, we're gonna break past all-time highs, which is right here. So if this breaks, it's a for sure trade that it's gonna be going all the way back up here. But right now it's going down, so it needs to retrace down before it goes back up. And this is seriously the most simplest way to using Liberty. And as you can tell, we were still hitting that support at 4,500. If I go back to Hourglass, you guys would have made profit if you guys would have took that price. Do you see that? And wow, what a beautiful example. It popped up on the RSI. I'm drawing my bowling barriers. Remember I talked about that yesterday? Wow, this is beautiful. This is like an amazing example. I can't believe it. Amazing example of how to utilize Liberty and Hourglass so you can have more confirmations and even more confident trades. This is, I can't believe it. Are you guys hyped up right now or what? You guys seeing this?
This is really cool.
Right? Exactly. So this is why I say personal education is a lot better, because you're building a skill to identify how to take trades. And if you guys really focus and study on this, you guys can make a career out of this and no longer have to work a 9 to 5. This is something that you guys can really actually master, because like anything, you go to work, right? You have to get good at your job. Well, this is the same thing, but at a different skill. Okay. This is all it is. All you guys need to do is learn how to read candles, learn when to take trades and when not to take trades. That's it. And that's pretty much how you use Liberty, you guys, okay? So you want to find the floors and then you want to find the roofs. Now, I'm going to take this away and I'm going to go to the Fibonacci retracement that I want you guys to take a photo of if you have not had time to watch the video, because this is the most simplified way of how to find your entries and exits, like the dummy way, like just with your horizontal line. This is going to give you about, I'd probably say a 50 to 70% chance of wins, like because they're really good entries from the pivots. But if you really want to get even better percentages on your wins, like an 80 to 90% win ratio on just Liberty, then you're going to want to utilize the Fibonacci retracement. So I'm going to take these lines away. I'm going to go all the way over to this left side. Now, I know that, obviously drawing those lines can take a while. So this is the reason why I use this Fibonacci tool, because when you're going through trades, you need to be kind of quick because your opportunity comes and goes very fast. So this is one way to paint it. Okay, yeah, so we're going to go over the third tab on the drawing right next to the tools. We're going to go to the pitchfork and then scroll all the way down to where it says fib retracement. You guys see, or you get,
Yep,
you
got
guys
it.
see yeah, you guys clicked it? Okay. So the fib retracement, you're going to just go from, this is how you use this. This is so simple, okay? You're going to go from top to the bottom of the lowest candle for a actual indication of a sell, okay? Now, vice versa, if I were to let go of this and do it again, you're going to go from the bottom to the top of that candle to indicate a buying opportunity. So top to bottom, sell, bottom to top is a buying opportunity. That makes sense? Now, after we do that, we're going to go to the settings right here, because we don't need any of this mumbo jumbo color stuff. We just need to make it very clear for our eyes to adjust to. Give me 1 second. So I want you guys to follow along and just simply copy exactly what I'm doing or take a photo of it. But this is the strategy that's called the quarter strategy. Now, quarter strategy are pivot points of where most people generally buy or sell at. And the quarter strategy is simply, in like the most simplest way to understand, is just people are buying at numbers like 1,000, 2,000, 3,000, 4,000, or 1,500, 1,000, 1,500, 2,000, 2,500, like whole numbers. People are putting orders in. And so what we're doing with the quarter strategy is we're entering the market at those whole numbers or percentages that most likely a bunch of people are buying at. So if we have a lot of buyers buying at, let's just say 467, what is the market going to do? It's going to pop up because most likely 100,000 people around the world have the same price at 4,500 instead of, I don't know about you guys, but I don't put in like in my limit orders or when I do a price, I don't put in 4,226.52 cents. No one does that. It's usually whole numbers. So We're going to find that now. I'm going to change up a few things on here. And see, what I love about trading is that trading, you don't need to go to Harvard. You don't need to go to anything like, those big schools to learn how to do this. You could do this from the comfortability of your home. All you got to do is study and know what numbers the world really uses, like whole numbers. We're going to uncheck these 3 boxes to the right, and we're going to do our level lines all the way thick. And then we're going to add percentages. And then from labels, we're going to go to the right and then cancel background. And let me know when you guys took a photo of this or you guys have copied it.
I'm good.
Athena, Claudia, Alejandra.
Yeah, we're good.
Okay.
I'm good.
So now you guys can remove this and then you guys can just simply click it again. And it'll stay on most of the pairs that you guys switch to. Now, same thing, right? If we want to look, okay. Where's the arrow? If we want to look for a downward position for a sell, like a sell option, we're going to go from the top candle all the way to the bottom candle. The reason being is because from the top, we can find entries for a sell as the market pumps right back up. So what we're looking for here is for this retest. You guys see this? This retest right here before it goes all the way back down, okay? That's what we would do for a sell. Now, if you guys notice the 61%, right? Remember the whole numbers I was talking about? It should be very, very close to whole numbers. We scroll over to 61%. We notice that that's a shallow retracement at 4,520. So that's really close to 4,500. So you can make an educated guess to make an entry around 4,500 above 50%. That's a little bit over shallow retracement, okay? This becomes deep retracement once it goes into the red, okay? So your entries initially should look like from this position. So the whole goal behind this is that you're getting actual entries from pivots. Now, if I scroll my mouse to the left, look at all those pivots to the left of us, okay? Look at all these pivots. This is just a lot of resistance right in here. See this? This is a lot of resistance, but it goes along the line. So this is respecting resistance. Your entries, how you should play this for a sell is that I only give my students two options, okay? 1% at the 61, so 1% trade for like 10 bucks. And if that candle breaks past 61%, your second entry should be at 70 or 78%, hoping for a downward movement. Does that make sense? Because above the red line becomes an excellent entry for a sell, below the 70% becomes a decent one, and then the 61 becomes a good one. So, or no, sorry, good or decent, good, and then great. And then vice versa, you simply use this same thing. Screen. We're gonna use this one since this says GBP 63 over USD, or should we just had news, didn't we? I thought we just had news. Yeah, we have news right now for it. It's kind of even. So how we would use this is go from the bottom to the top, and now we can look for a buying opportunity. At 70 to 80%. Because if you guys notice, look how it already tapped 70 to 80%. It became a deep retracement. And if we could have got that, that would have been a clear because it's already at 468. So this gives you good entry points for a good lower price before the price really moves. And what we would be waiting for is for 70 to 78%. And like I said, if you were to take a trade on this, you want to do one trade at 1% at 70%, which is 400 or 4,448, and then a second trade at 4,427. Now, if I go over here and I put my mouse around 4,447, I can just go back to Hourglass to give me a better idea of what the market's doing with all of my indicators. So I notice, oh, this isn't it. Yeah, this is catchy. So I notice here we have a support at or near 447, and it's actually on Hourglass 443. So I draw the horizontal line so I can see a better overview, and I go and put my mouse on Hourglass right around these resistant area or support areas. And wow, look at that. It's already bouncing off of that support. You see that? That's 4,435. And it said 4,449. So a little bit off, but it's still pretty accurate. It's still very accurate. So in a sense, you would want to wait for the cross up like it's doing now. It's bouncing off support on Hourglass, and you most likely could probably take this for an uptrend before it comes down again. And there it goes, the cross up. Oh my gosh, another perfect example again. Jeez. Making me want to trade you guys. I'm so sorry, but we got to train. We got to train our minds. We got to. Boom, another excellent entry here for just a 2 to 3 minute trade. Remember, we're minute men and women, 3 minute men and women. How's it going, Wes? You here?
Yo, what's up?
And now it's falling. So it was a good setup until it just started falling. So that's why you would want to wait a little bit before it reaches near the support. And then obviously, like I said, if you guys took a 1% trade here and it went the other way, you wouldn't be so upset because now you get a second opportunity at 78 retracement right before it retests. Now, usually I suggest for Liberty and Hourglass strategy, Athena and Wes usually do 5 to 10 minute trades. Are you guys still doing that? Oh, Wes?
Yeah, I do 5.
Yeah, so the reason being because like for this play, it may take a little while for it to actually play out. And like I said, it's hitting, like if you guys look past here on Hourglass, there's 1, 2, 3 support boxes that it needs to crash through. So that's like an invisible resistance. If I were to draw this line, it'd be like this in all sense. Just a bunch of lines it needs to crash through. And you see how it's having trouble right now? So those are good pivot points, oh my gosh, now it's going into a good trade. So there you go. If this was like a 5-minute trade, you'd be clearing it. Like I said, it went down. You probably would have rolled over once for a 3-minute trade, but it's really bouncing off of this 70% for CAD CHF. It's really bouncing off this 447 and it's staying there. So we might be going up. There's no Moshi cloud yet. That's simply how you would want to kind of time your trade correctly. Now, if that makes sense, does anyone have any questions? Because I would like to make a few trades with you to kind of show you guys how to use it. I do suggest going on demo if you guys are going to switch your times from 3 to 5 minutes, because it takes, a day or two to get used to, rolling over 5-10 minutes. I suggest going on demo, just if you guys are going to try this new strategy. If you guys have done it before, then go for live. But I would like to make a few trades with you guys. Does anyone have any questions at all for Liberty, Hourglass, what time frames to use? I did show you guys, the setup should be currency strength for Liberty. What's the trend, up or down, support and resistance, is the cloud red or blue, and then using your Fibonacci for entries. That's literally, that's the system. That's all the system. I'm gonna run it one more time. Currency strength. Where's the trend, up or down? Because remember, we cannot use Liberty if it's in a consolidation phase. We need to look on the 1 hour for a trend and then go to the 5-minute to see where it's headed. So trend up or down. And then once we find the trend, what did we have to look for? We have to look for the roof and the floor. So roof and floor, roof being resistance and the floor being your general support. Now, after we find the general support and resistance, then we've got to look at the Moshi cloud. Where is the Moshi cloud going? If it's blue, we're going upwards for the next hour or two. If it's red, we're going down. Now, these sell buttons and these buy indicators are pretty accurate. They're very accurate. So you don't only have to go off Hourglass. You can simply just go off of these Liberty buys and sells, but you will need some time for the chart to play out. And then once we find the cloud, whether it be red or blue, then we're gonna put our Fibonacci's, which is our roof and floor, and then we'll find our entries. And like I said, how many entries do you guys wanna take? Only 2, only 2. So if you get one at 61 for 1%, your first trade should always be 1% to test it. If it's 1%, and it falls, you lose 10 bucks, okay, whatever. Don't be scared to go in for a 2% trade at a better entry, okay? Sometimes the universe is knocking you out of or spiking you out of your trade because it wants you to get a better entry, but you've got to be aware enough to know where a good entry is, because you can lose your second trade. So you got to be good. You got to know when the 70% is and the 78 for a deep retracement, and then vice versa for a sell, okay? And simply, Wes, if you know how, did you Wes, did you have the Fibonacci up and running or no? I don't think you did, huh?
No, I didn't.
Okay, let me just get it up for you. You guys review your notes really quick, kind of look at Liberty for a little bit. Let me just get Wes up to date with the Fibonacci. So Wes, pretty much, you know how like you draw the floors and roofs and all that? Well, using the Fibonacci retracement will better your entries and exits, and it'll make it a lot quicker for you to make a play. Do you see how I just did that?
Yeah, yeah.
Okay, so what I want you to do is simply copy this, but before you do, you're gonna go all the way over to your left by your tools, and you're gonna go the third tab down, and you're gonna go all the way to fib retracement. Oh, and then one more thing, also you guys, if you guys see this huge gap right here, this huge gap, don't make a trade in there. Like that means it could fall from 463 all the way down to 369. So if you see this for a sell, do not get in the gap, vice versa. If you see it for a buy, if I just did it for a buy the other way, do not get in this area. Like you want to get it before it blasts off. You do not want to be in this area. You will lose every time. Every time, okay? So Wes, sorry about that. Let me get the fib up. And just copy these fib retracement values. And then you're going to want to take a photo of this, Wes, because as well as everyone else, because when you do get, like when you refresh your page, you do have to restart this like fib numeric value. Like you have to redo it over and over again if your page like refreshes. It's a little annoying, but it's worth it.
If there was a way to save it.
Huh?
That was going to be my question, if there was a way to save it, but I guess not.
Yeah, no, there's no way to save it. I know I've been wanting to say something or email them, be like, can we save this? Like, but unfortunately we can't. But hey, eventually, you know what that just helps you guys do? It just helps you guys remember the numeric value. So you guys will just eventually enter it and be like, yeah, I know how to do this now. Is everything good, Wes?
Yeah. Yeah, I think I get everything.
Can you, I could do multiple sharing. If you want to show me your screen. Anyone else, if that doesn't look right, they can show me your screen. Are you able to share the screen, Wes?
Yeah, 1 second. Hey, you share it now. Can you see it?
Does it look like this? Do you have your percentages at 100, 78, 70, 61, 50, 38?
Oh no, no.
So then click it again, and you're going to want to go down here where it says levels, price, and percentages. Click the percentages, and then scroll to the labels and hit the right. So you want everything to push to the right.
I'm trying to pull your screen back up now. Oh. All right, you said go where? Percentages?
Yeah, percentages, and then labels, and then hit the right tab.
Like, yeah, on the right. Yeah, yeah.
And then it looks like this now.
I can't pull your screen up.
Hold on. Can you see my screen?
Yeah. Oh, I took a picture of that. Let me see if I put everything on there.
All right, so how you're going to use this is you're simply going to go from the top candle to the bottom candle for a down, like for a sell option. So if you want to look for a sell, you're going to use this Fibonacci from the top of the candle all the way down to the lowest candle here, because this was the actual support it bounced off of from prior history. See that?
Okay, yeah.
And so how you're going to use this is that, oh, excuse me, how you're going to use this is simply for a sell, you're going to want to wait for a retracement at 61 to 70% before it going down. Do you see that? And the reason why, Wes, we're using the Fibonacci is because the Fibonacci has a quarterly strategy where people usually enter the market at like 4,500, 3,500, 3,000, like whole numbers. So this is like a quarterly strategy where obviously there's been people buying at like 50%, 38%. There's been some resistance. This is going to help you have a better overview of the market and where to enter and exit. And then vice versa, if you were to use it for a buy option, you're simply going to go from the bottom of a candle all the way to the top of the roof right here. And you're just going to simply look for the next opportunity to buy. Like, for example, like if it keeps going here, like 70%, 78%, boom. And then it's going to retrace up. Does that make sense?
Yeah, I'm still trying to get this shit set up right. I see what you're saying though.
Did you have the Fibonacci set up right, or?
Yeah, I got it now.
And then pretty much you're simply looking for two trades, 1% trade at pretty much 70% or 61%, and then you're going to want to do your second trade around 70 to 78%. So 1% trades at 61 to 70, and then 2% trades from 78. Okay, if it's really retracing that low. And once you lose those two trades, you don't go in anymore. Like if you lose two, if you're 1 and 1, you keep going. But if it's 2 or 0 and 2, you move on to the next one. You do not want to trade. If it doesn't go in the direction that you're predicting, then like for two of the trades, then just move away from it. That's simply it. All right, so let's see if we can find something here. Wow, that CAD chief did move up a little bit. It had some consolidation, but it did move up. Let's see. Check the currency strength. GBP is having news right now. Oh wow, Chief is not doing well. NZD is not doing well. AUD is not doing well. Chief. So Euro Chief is in a downwards direction, but it did have a big pump up. Let's see, 5 minutes. Yeah, it's been uptrending a little bit. We have some consolidation. It is consolidating right now, so that's not a great chart for this, but looks like it could be coming down. Oh man, CHF just blasted off. So EuroCAD is going down right now. It just like pumped all the way down. Let's see. Is anyone watching EuroCAD? This could blast right back up. It's gonna hit 0.63, 7,008. Let's see. So on Liberty, I'd want a 70% retracement, or 61 at 699 or 688.
On Liberty, are you on Euro Chief or Euro CAD?
EuroCAD. Or no, Euro Chief, sorry, Euro Chief. I was looking at the wrong one. On Hourglass. So it's in a downward movement, but it is above the EMA band, so this could continue up. We're gonna want to wait for the RSI. One of the RSIs are already at the bottom. It broke through the sell. All right, Liberty.
Did you see you're on Euro NZD on Liberty?
Oh, what the heck? Oh, my chart's glitching. It says on my Hourglass I'm on Euro Chief, but it says it's Euro NZD. What the heck? Yeah, my Hourglass isn't working. Is yours working for Euro Chief?
Yeah, mine is.
Mine's not switching to it at all. Bear with me. Let's see. No, it just keeps going to Euro NZD. Is this what Euro Chief looks like? Because it says that this is what it looks like on my screen. No, it says Euro NZD. What the heck? If you guys want to look at Euro NZD, I guess I can't look at Euro Chief on Hourglass at all. It is above the Mochi cloud. We can draw retracement. Oh, yep, it's hitting 38%. Okay, Euro NZD. Let's see, Euro NZD. We could, oh man, this is where you can go. Oh no. Euro NZD looks like a good buying opportunity. Let's see, Euro NZD. 66%, and it's going. It's flying. Yeah, I flew on my binary cent. 420. That was a good one. Euro NZD was a really good one. So can you guys look on my screen really quick how I found that very fast? So I drew the Fibonacci from bottom to top. I saw that it was at 38% retracement and bouncing. And so I went over to my screen and looked at Hourglass and I said, oh, you could probably take this for a call, and it just went up. So that's what I mean by you can really utilize the Fibonacci tool to find your entries. See, the first entry at 38 was 373. If you go back to Hourglass, it went below 373, so it went all the way to 354. Yeah, right here. Yep, and it's dead on, you guys. You see that? It's dead on. 352 to 354. So this is, this is a great tool to use for entries. Another way to get confirmations. Obviously, that was another good play right there. Wish I was a little bit faster to it. Let's look for the next setup. But I mean, let's go for the next one. Let's try to make a play. We're almost. We're getting close. Hey, we're getting close. We're getting really close. The setups are right there, though. The setups are beautiful today. So let's see, currency strength meter. No one trade GBP because the governor is talking right now about it. So we want to trade GBP, JP, or JPY is pumping massively. Chief, NZD, and AUD are losers. Losers. So let's try JPY versus NZD's been down for a while. Let's see. JPY. Oh yeah, this is in a nice uptrend as well. NZD JPY has a red 1 hour candle, but it's indecisive, so it could be turning around. It's already at 78% retracement. It is in the red mochi cloud, so it could be going down further. Does you guys see NZD JPY on Hourglass? I don't see it.
I can't find it on Videforex. I don't have it.
Oh yeah, me neither. I don't have it either. Okay, never mind. Let's look for Euro versus Chief, or Euro versus NZD, or Euro versus AUD. Euro versus USD. I just think the setup's there. I mean, if you guys look at it, it's kind of, it was in an uptrend, came down. We're at the bottom. It says this looks like it's curling up. You guys can take this for an uptrend. We're already curling up. Euro USD. Yeah, it just bounced off 100% retracement on Liberty, and it's above the, it's starting to go above the mochi cloud. You guys see this one? This one just blasted off too. So obviously, that's what I mean by, like, Liberty is a great tool. It's amazing tool. I mean, obviously you guys can see that it bounced off 100% right here. If you guys look at my screen, bounced off 100% very nicely. And all I did, look at this, is all I did. Okay, this is how fast you can be, because I'm literally just like few seconds behind before the candle explodes. But you go from bottom to top Remember the all-time high. And then if you noticed, exactly 100% retracement. And that would have been a strong, very, very strong entry at 100%. You guys, that's like a 3% trade. If it comes down here, you can catch it before it goes back up. That's a 3% trade for sure. For sure. And then this is most likely going to retrace back up to 61% before it goes down, if it's going to play out. But the whole what I'm trying to get at is that it does take a little longer. You do miss a little bit of opportunities. Like obviously, everyone saw that we missed like 2 or maybe 3, I think, today, but we missed 2. But that's okay. Like this is just training. I'm trying to get you guys to see and identify the market. You know, that it seemed like this morning is a great trading morning. Things are going great. You know, obviously things are going our way. Does anyone else want to pick something out? Does anyone want to try looking for one, and we can set it up again? Man, that Euro USD was a beautiful play. You have the cross up, or first you have the cross down, then the cross up, cross down, and the cross up, breaking past both the oversold line going into overbought, or working its way to overbought. This is a beautiful play right here too. I promise for Wednesday and Friday we're gonna hit the bag hard. All right, we're gonna get in and out of the market. I've been itching for it. I haven't traded as much, you guys. I've just been really focused on other things, but I really want to start hitting the bag again and again and again. Wes, Athena, Claudia, Mara, you guys see anything you might like? Anything you might want me to draw up? Explain.
Yeah, I'm checking some pairs out.
Which one did you call something, Wes?
No, I was just looking at a few.
Oh, Mara, you said Euro JPY? I just saw the text Euro JPY. Oh yeah, Euro JPY. This could be going for a buying opportunity, but it looks like it's below the band. It is in a downtrend, so it could be going down. Let's look on Liberty. The hour is uptrending, but the hour candle is red, going indecisive. It's in the red Moshi cloud. Could be turning around actually. Actually, it's down here too. It just bounced off of a, not 78, but around like 80%-ish. So remember, if you guys draw your barriers, we don't have to FOMO. We can wait for the next setup right here. Wait for the cross down and then the cross up, and then we could take a trade. Euro JPY. And for some reason on my broker, these things are 60% today. What percentage is it for you guys?
What is that?
Euro JPY.
60% for me.
Yeah, me too.
Yeah, 60.
Most of mine are 60 today. Wow. Whoa. Actually, yeah. All of mine are 60. Huh? What'd you say?
I think Euro IUD is the only one that's at 77. All the other ones are 60.
I was just gonna say that.
It's because we're having news right now. That's why the governor's speaking. That's why probably all the attention's on GBP and stuff. You guys can look at, I think, what'd you say? AUD what?
The one we were watching is
Euro
Euro.
AUD.
Oh,
Oh.
Euro AUD. I'm looking at Euro JPY. I'm waiting for it.
Okay.
I'm gonna check out
Yeah.
Euro.
Euro AUD, it's 77.
Oh, they're both good charts. Dang. Euro AUD might go up if it doesn't crash below the Bollinger or the EMA. You guys put your barriers and wait for the cross down into the cross up. And check back at Euro JPY. That's a good chart. That's a good chart. But be patient. It's already crossing down. You guys notice that? Same with Euro JPY. It's crossing down. For Euro AUD, it's at 61% at 124. It could come to 70% at 5,079. So 0.79 it could, or it could bounce right here. 0.78 for a 70% retracement. I think I might have missed Euro JPY. Oh, yeah, Euro AUD is bouncing now. Did you guys get that price for 61 retracement? There's the cross up, cross up, cross up. Euro JPY was a good shorting opportunity. This was a good buying. Yeah, it bounced off of a 5,110 or 110 for Euro AUD. But you guys said Euro AUD was 70%?
Yeah.
Dang, it's 60 for me. That's crazy.
I just like got hacked out of all of my my
Leverage.
Liberty and Hourglass. Like says someone's using my account, supposedly.
Really?
Yeah,
That's kind of hard because like you can't have two hourglasses on like two different laptops under one account.
I know. Someone just, I don't know why I just got kicked out. It says you can't access the scanner right now. Your account is logged to the site from another device, but there's no one here.
No, I think it was doing that to me earlier. So if I have Hourglass and Liberty open at the same time, it like would kick me out.
Yeah, I have it all closed out.
Might just need to refresh it. 0.39 for AU or Euro AUD. I think it could bounce up 0.39. The 0.80 on my screen. Well, that's a huge difference, but 0.80. It's bouncing on 0.80 for Euro AUD. I want 1% at 0.80 and one at 0.35. I'm gonna try getting in. I just bounced off 0.88. .80 or below, it says. I'll wait for that cross down since it broke through one of the resistance now. It's at 0.39. Wait for the cross up, and then you guys can take an entry. RSI is still going down, so be patient. It's at the 200 EMA, it could bounce there. Now it's crashing even lower to 0.35. It just broke, so it could go to 100 and then retrace back up. 3 minutes on the candle.
Are these the ones you're saying we should take for 5 minutes or still like 2-3 minutes?
If you can get a bottom price, 3 minutes, but it looks like this could take a little bit, so I'd say 3 to 5 minutes. I'm gonna do 3 minutes.
Okay, cool.
because it's already had 1, 2, 3, 4, 5 candles. It's had 1, 2, 3, 4, 5, 1, 2, 3, 4, 4 to 5 candles. So the next one should be, yeah. So yeah. I did clear one trade for 5 minutes. I got in at 0.55 and it just pumped up to 0.95. Cross up. You guys cross up right now. It's crossing up. Oh, yep. Huge bounce off 78%. 0.35 like I wanted. Cleared the second one. I'm not going to clear my top trade. Yeah, I'm not going to clear 107. I did not clear my 1% trade. I lost that one. Okay, let me see if I can. So the next candle should be a call. It did bounce off the 200 EMA, so that means we still could be going up in an upward direction. Let me bring up my binary sense so I can show you that I cleared those two trades. Oh, your AD just flew up there. It's 0.61 or below. I'd pretty much wait for 0.35. It goes down. You guys can do a 1% here if you want. But 0.35 is what it reached before.
You said enterprise 0.35?
Yeah, it's like right near it. It just hits 0.38.
There goes 0.31.
1% because it could crash below. So 1% on this one. I don't like how it already broke like the 78%. And like I said, you don't want to make a trade once it breaks that because it can fall all the way to 100%. Or so like I said, 1%. And it's bouncing off that 200 EMA line again. And I just got logged out. That's crazy. Bear with my binary cent just kicked me out and won't let me log back in now. Did you guys get that price?
Yeah, we got 0.30 and clear.
Awesome. That's how
What's
you do it.
Got it.
Anyone else get that price?
0.31 for me. Just cleared.
Awesome. You see, look at patience, patience. Let it come to you. Let the money come. So let's look back on my screen, you guys, for the retracement. If you guys look at it, you guys see what I see?
Yeah.
It bounced off 78. Like I said, I wanted 3% trade at 0.33, but I said 1% because I got sketched out that it broke through like the almost touched down to 100%. So I got sketched out a little bit. So I said turn it to 1%, and it actually went our way. So you don't be scared. If you don't feel like it's going to be 3%, even though it's at the bottom, take a 10%, or not 10%, sorry, take a $10 trade or a 1% trade. I'm giving it a few seconds. I had 2 entries and I'm about to clear the 2 entries. I got in at 0.64 and 0.33. Oh, I just cleared the top. I just cleared the top one.
I just cleared the top one. I almost got screwed out.
Were you on the top with me? Like the same?
Yes, I took
Oh
a.
my gosh, that was so close.
I was scared. Yeah.
That was close. Oh my gosh. So what
I'm
is
still waiting to clear.
I recorded too. I'm gonna tag you in it. It was so close.
that? Oh my gosh. Yeah, it gave me a heart attack this morning. Now I'm awake. I'm awake now.
Let's go.
Yeah, I was in at 55. I just now cleared.
Oh my gosh, patience. So yeah, I went 3 and 2 for that one. I got spiked out that first one by 1 pip. I should have went 4 and 1, but I went 3 and 1 or 3 and 2 for today. How'd you guys do?
We did 1 and 1.
1 and 1. Wes, how you doing?
2 and 2.
2 and 2. Athena.
I only took one because everything disappeared on me.
Yeah, it did on me that last second. I can't believe
2-0 for me.
Who said that? Who said that?
Mar, me.
Awesome. Woo! Congratulations, Mar. It's your first time trading, right? No, not first time, but really looking at the charts and stuff, right?
Yeah.
Awesome. Awesome.
Thank you.
That's awesome. You guys, this was a really good session. I'm gonna stop it here since I did do 3 and 2.